Oh, thank you, Tom. I know why you're calling. Thank you. Appreciate that. I'm not going to take the call. As soon as I saw this is Talon calling, I knew that he was calling to tell me my sound was off. Let's go to comments. All right. Let's say hello to folks. Tim, welcome. Talon. Yep. Sorry. I'm going to skip over all that. That's strange. You heard the alert fire off, but you couldn't hear me. Interesting. Thanks again, Talon. Uh, sorry. Sorry. All right. So I hope everybody had a great weekend. And what we're going to talk about tonight, obviously, are the futures action. We're going to talk about concerns that I have about the threats to the market. And it sounds contradictory because we lightened up on our short position. I did a video on that. It's posted on YouTube. And I took some of our short position off. I hedged a portion of it as well. And it may sound strange, why'd you do that? Yet you're so worried about the market. Well, it's simple. It looks as though we're having sector rotation into the triple Qs. We had broken out last week. We are moving lower in the pre-market, but I think what they're going to do here is just simply going to retest one of these support levels. And these are moving averages. You have what is this? The 5 period and or the probably 10 period, 8 period moving averages. So back to that 5-minute candlestick or 5-minute chart. So they gapped it up. We have a new 5-minute bar that has opened up. The question is, do they take out this prior low and they drift this lower? I think that they probably will. Because we're expecting that retest. And on that retest, I'm probably going to lighten up a little bit more on the short. Now, it may sound like, why? You're lightening up into weakness. Yeah, we're lightening up because we're taking a look at the macro view of the market. We had a breakout on a weekly time frame last week. There are plenty of reasons why we should be bearish on this market right now, but price means everything. So if prices are going against you, then you're fighting the market. You're not sticking with your discipline. So NQ down at current 0.20%, slightly off of its lows, definitely off of its highs. Let's head on over to the ES. This is the S&P 500, down 0.15%. They did the same thing here, gapped it up, moved it lower. RTY. These are the small caps. Now, the S&P 500, the Dow Jones, and the small caps all hit all-time record highs last week. And we are pulling back down 0.21% at current. And let's check in with the mid caps. Mid caps down almost 1/3% here. And they did not gap up. They gapped down. I got to check in with yields because yields may be a factor here. No, yields are down. So I think that all this is right now is a retracement. Again, we broke out last week. It's highly typical that we get a pullback and a retest of a breakout point. I think that that's what we're seeing right now. So I don't view this as being doom and gloomish for equities yet. When do I view it as being doom and gloomish? Well, let's bring up the NQ again. Let's go to a daily chart. If we fail to hold, let's bring up the triple Qs. If we fail to hold this 21 period EMA here, that would spell trouble. What would really spell trouble is this, is if we broke this blue support level here. So right now we're in an ascending wedge formation. You can see last week we broke out above that resistance level. The triple Qs, I treat it as an index. So all the other indexes broke out to all-time record highs last week. QQQ did not. We have earnings coming up, and I call it silly season for a reason. You're going to have all the pundits on CNBC talking about how great earnings are going to be. They won't talk about valuations. They won't do that. The only time they talk about valuations on CNBC is when the stock market is declining and all the well-dressed, slick-back Wall Streeters come on and they go, oh, well, the valuations are so extended here, and they pretend that you should have known it. It's all nonsense. So, yeah, so this is the concern here. If we break this lower band of support in blue, that would have me adding to shorts, not reducing size. Let's go back to the futures. Oh, we did equities. Let's take a look at the US dollar. Sorry about that noise. All right, so the dollar is opening up here. Now, what's surprising is the strength of the dollar with all the debt that we're taking on. But I hate this phrase, but it is what it is. What's really surprising is that emerging markets, gold, silver, don't care. They really don't care. They're just moving up. Remember, gold, silver, oil, they're all priced in US dollars, and emerging market debt is denominated in US dollars, yet they're all rallying. So, traders don't care until it matters. One day it'll matter. Right now, it doesn't matter. Let's check in let's go back to gold. We'll go to energy thereafter. Gold moving up here. Wow. 0.82%. Do we have new weekly higher highs already? I think that we do. Yes, we do. New weekly higher highs. All-time highs, 4,584 the ounce. I will warn, I went over this with members on the week ahead commentary, that RSI on silver and on gold are above 90 if you look at a monthly chart. So be careful here. When a commodity decides it's done going up, it just doesn't go down a little bit and it crashes. I mean, it really, really goes down fast. So, we've lightened up along the way, a little bit of silver, some gold mining stocks came off. Do I think there's more upside? Yeah, we're probably going to go parabolic. But just be forewarned, when it ends with a bang. So be careful. So that is, before we leave the weekly chart, let's bring up silver. Wow, silver's up 1.23%. No new weekly higher highs yet. Palladium, I was longer this at one time. I sold it way too soon. Palladium broke out last week above this red resistance level. Looks like we're going to do a retest here. It's up at current 0.68%. Platinum, PT, right? PA? Sorry about that noise. PL. Platinum. All right. Platinum up 0.30%. Let's check in with oil. This time last week, folks, you remember that the news had come out about oil, and you saw that oil had just been hammered. I mean, Venezuela was in the headlines. A horrible sell-off in oil. And I said at that time, I think that this sell-off is the bottom. And sure enough, that very day, oil did a bullish key reversal, meaning it opened down, it closed up on the day. That's a bullish key reversal. So let's bring up oil. Let's show you what it looks like here. We remain in the downtrend channel. No breakout yet. We are up at current 0.68%. Let's drill down. Here's a 15-minute view. I mean, this is a beautiful, beautiful breakout of a 15-minute time frame. So here's the setup here, right? Declining wedge formation or declining downtrend channel, consolidation, long story short, a continuation breakout pattern, and here you have it. So bullish on oil. Let's check in with natural gas. We opened up a position on natural gas. It treated as well one day, and then the next day it kind of took us to school. We did not open a full position. If we see that natural gas stabilizes, we'll be looking to add more to natural gas. We're getting long of the leverage ETF, BOIL. We treat that as a swing trade only. It's not an investment. We don't invest, ideally not invest in leveraged ETFs because of the time decay. You know, the only exception I did take was with AGQ and with NUGT. Those are the two I took exception with. But they're in strong bull run, so I'm not too worried about the time decay. Right now, this is not in a strong bull run. You don't buy a leveraged ETF when it's in a consolidation or it remains in a downtrend, which natural gas remains in a downtrend. So natural gas up here, nearly 3%. I would like to see it better, but and I may add more to this trade. So members, stay tuned for an alert if I do add more, but we need the setup. We're not buying a commodity. We're not buying a stock. We're buying the setup. What else do we want to take a look at here? We did natural gas. We did oil. Let's take a look at live cattle last week. Live cattle, which I trade from time to time, rebroke out last week. You could see here, it's been in the downtrend channel. This is a 15-minute chart. Been in the downtrend channel. Rebroke out on Friday afternoon. Let's go to the weekly chart. Weekly chart. We closed down last week. A bit of reversal off of resistance levels. So perhaps, I don't know if Venezuela is a big protein country like Argentina, but if they are, we may be getting some cheap cattle. They can't feed their people, so I can't imagine that they're a big livestock producer. Let's take a look at agriculture. Wheat up in the pre-markets, 0.14%. Corn down, looking very weak. And ZS, which is soybeans, up 0.02%. Let's check out XRP. XRP down 0.9%. And Bitcoin is up at 90,910 the coin. Let's go to comments. We have a lot to go over, so I'm going to hey Paul, welcome. How's the temperature down there? Miser, welcome. Pop says, no, I don't. No, I don't. Oh, the only issue I took with you was you bought those call contracts, and I think what Talon's, who I love, what Talon is expressing here was my dissatisfaction with the fact that I don't mind buying calls, but just don't buy front month contracts or He didn't buy front month contracts. He bought the February contracts, which is close enough for me. On I think it was Boyle. So no, I don't hate your trades. Tim, hey Bob, what do you think the market do if? I think that they're going to do the same thing that they did when he announced tariffs. It's going to be a real gut punch for the markets. They are not going to be happy, not at all, because if they're illegal, then we have to provide restitution of what, 600 to 900 billion dollars. Good luck there. The trade deficit was the lowest in 16 years last week. That cannot be ignored. They were supposed to announce that ruling on Friday. Apparently, that got punted. Sometime this week, it may get announced. If they rule that it's illegal, buckle up. And heck, you may get a knee-jerk reaction to the upside because things are going back to normal where the globalists are in charge. But reality is going to hit really quick, and I would take that opportunity to short the market quick. TG Burton, welcome. The lovely Jody, welcome to you. Lee Cable. Let's check it out. You can't rule it out. You're going to have resistance. Obviously at all-time highs, but you're also going to have resistance. This looks like it's going up. I think, yeah, to answer your question, long story short, I think that it can go to 100. Yes. This is an extremely bullish setup here. I mean, there's your launch pad. We start breaking out above these resistance levels. Everybody that's been bet short against silver is going to have their face ripped off if they don't have a stop loss order right above all-time highs. And if we do get through all those all-time highs, all those stop loss orders are going to fire off all at once. And that could send us up to, 85, 90 the ounce. Easy. TF Hatter, welcome. Watching NG is Boyle as well, but that ETF is dangerous with the time to. Yeah, it is. I mean, yes, you're absolutely right, and I think you're making my point. As earlier, you cannot consider Boyle to be an investment. So agreed. Many times I'll sell premium against Boyle because it pays good premiums, and you get the time decay. Thank gosh long from Friday on April NG. And I'm fine with an April strike. So, you're down in Boca. Oh, nice. Very nice. That's like New York, New Jersey South. Thank you, TF Hatter. Yes, please hit the like button, please, if you folks could. I know. You're welcome, Tim. Okay, let's get to it. I think we covered everything that we needed to. RB. No. I don't think so. It ought to be. I mean, let's go to the weekly chart here. Yes. This is not a parabolic move. This is a consolidation. If we fail to hold this support level that I just drew and make that blue as well, then it's a different story. But all we could do is listen to the market. What's the tape telling us? What is the path of least resistance? If we ignore it, that's on us. I would love for my short, which did show us a profit at one point, to have worked out, but it doesn't appear that the tape is telling me that it's going to. Therefore, I'm going to take the early signal from the market that, you know what, you're too big in position, lighten up. Am I bullish on the market? Yeah, only for the technicals. If you talk about valuations, if you talk about systemic threats, if you talk about the geopolitical risk that's out there, no, not at all. The fact of the matter is the path of least resistance is to the upside. Don't fight the tape. Simple as that. You got to be cold. You got to be really, really cold, even if it means you're admitting you're wrong. Admit you're wrong. Simple as that. It's easier. Trust me when I tell you, the easiest bill to pay is admitting you're wrong fast. Ego be damned. Thoughts on the video? It's probably going to go up. They're going to rally it into earnings. Earnings aren't coming out for the next couple of weeks, but NVIDIA is probably going to head up higher. The technicals don't look good for NVIDIA right now, but you got to keep in mind that NVIDIA broke out 3 weeks ago. Retest 1, retest 2. If we make new weekly lower lows, my tune changes. But right now, I'm viewing this as a consolidation and that we could quite possibly see NVIDIA begin to break out, especially if they gap us up tomorrow. Let's check back in with NQ. Yeah, and this is coming back a little bit here. So let's get to it. I got so much going on here. Okay. All right. So let's talk about tomorrow's the 12th. So this week, Monday, nothing. A bunch of Fed heads come out. It will be a inflation week. So buckle up. We get the Small Business Optimism Index, the NFIB, coming out on Tuesday. CPI coming out again on Tuesday. Home sales, U.S. budget deficit. I thought that was last week. Wednesday, retail sales, big number. Producer price index. So you have CPI, that's consumer inflation. Then you have PPI, that's producer inflation. And the number you want to watch is year over year. More Fed heads, a lot of Fed heads out this week. Thursday, more Fed heads out. Friday, another 2 Fed heads out. So something's going on. The Federal Reserve is out there massaging the markets vis-a-vis their speeches, and they're probably collecting a nice little fee for that as well, being a part of the prestigious Federal Reserve banking system or cartel. FedWatch tool, probability of interest rate cuts in January do not exist. They do not exist on the elemental charts. Forget about it. March, 31%, high probability of no cut. April, high probability of no cut. I don't want to go to June. That's too far. So until April, don't expect a cut. So that's one leg of the bullish chair that's holding up this market that's not there. It's been taken away by the Federal Reserve. They took it away. Valuations. We're near 41. We are at the highest level on the Shiller PE ratio since 2000. 44.19. Sorry, November of 1999. 44.19. Buffett indicator. And for the record, the mean is 17.33. Keep that in mind. We're at 40.94. The mean is 17.33. Keep that in mind because we're going to be referring back to this in a little while. Buffett indicator. We are now 230% strongly overvalued on the Buffett indicator. We are probably tapping a third standard deviation Bollinger Band on the Buffett indicator, which is just the word unsustainable. comes to mind when it comes down to these charts, these valuations. The problem is that people think that we can grow into these multiples. We're going to talk more about that in a moment. Short interest in the median S&P 500 stock has surged 2.4%, the highest in nearly a decade. One would think that that's somewhat bearish. It is, yeah. If you take into account historical timelines here, this point here was right before the financial crisis. So the markets were still grinding it out up higher, even though short interest was moving up higher. So this is a concern. It's not a reason to go out and say, okay, price action be damned, I'm going to short the market. You don't know the market better than the market knows the market. And this right now, all it is a tell. It's telling you that the big players are out there. They're nibbling, but they can afford to carry their position. Little guys like us cannot. We got to be right. And once we start seeing a breakout, we're not going to fight the tape. We got to wait for a break in the market or a parabolic move up higher. And then the capital that we took off the table early on, we put back to work again at higher prices. And we take the profits that we made on our hedge, we take that and we put that back into the short, and we're now bigger than where we were last week at some point in time in the future. That is why we are reducing risk. We've identified the risk to our position. Therefore, we manage that position. We don't go like this. It's not happening. It's happening. So we're not going to fight it. More bearish data out there. Wow. Okay, we have the Bank of America. This is not the CNN dopey index. Sell signal all over the place. Yeah, I agree. But the tape does not agree. The tape says it wants to go up higher. Therefore, the path of least resistance means up. We don't fight it. This here is Bank of America bull bear indicator since 2002. One would think that this was a very toppy and dangerous environment to be in, to be bullish in equities, and one would be correct. But the tape disagrees at current. That could all change at any given time. So the game plan right now is keep our hedges on, use a trailing stop loss order, and let the market take us out of the hedge. And when we get taken out of that hedge, in all probability, we're probably going to want to reload on the short side. Simple as that. Kabisi letter. Jobs have been revised down. U.S. job numbers have been revised down in all 11 months in 2025 by a total of 624,000 jobs. In other words, each jobs report last week was revised down by an average of 56,728 jobs. On Friday, November's price report was revised down 8,000 to 56,000. One would think the stock market would react, it would go down. It didn't. It went up. That's a tell, right? The market's saying we don't care yet. They will care, but not yet. Earnings. So here's where this has got to be, and this is the problem with the market right now. You know, you have a lot of these CMTs out there, and some of them are smart guys. I know several of them. The ones I know are very smart. And I don't know this gentleman. I'm not trying to knock him at all. But this here lures one into a false sense of security that we have very, very strong EPS growth for the equity markets. The Russell 2000 looking killer, looking really, really good. S&P earnings are growing. NASDAQ 100 earnings are growing. The problem is that these are estimates. And let's say that we get 7% earnings growth in 2025 earnings growth in of 7% in 2026. We go double digits. If in fact we do see double digits on revenue growth or earnings growth in 2026, it's going to take 10 years for us to grow into this valuation. Think about it. So there's no way that one or two earnings reports are going to support or justify this multiple or this unsustainable price action relative to GDP. Think about it. Jobs growth declined last week. One would think that's a knock to the economy, a knock to GDP. Yet, traders didn't care. One would think the GDP would collapse and this would have expanded outward. It didn't. Nobody cares until they want to. Not impressive. S&P 500, S&P 493 X Mag 7 earnings revisions lately. I think this is from Goldman Sachs. Yes, by Goldman Sachs. Earnings are being revised down by 2%. So that 10% is an estimate, and that estimate is being brought down. So let's say we remain at 7%. It would take 13 years to grow into the current multiple. I did this analysis over the weekend. I'm not just spitting out these numbers. I did it over the weekend. And that brings us to the great Stanley Druckenmiller, one of my favorite traders. I think he returned like 45% annually, some ridiculous number. I never use valuations to time the market. I use liquidity considerations and technical analysis for timing. That's what we are doing. Valuation only tells me how far the market can go once a catalyst enters the picture to change the market direction. I got to read that again. I think there's a little bit of a typo there. Anyway, what Druckenmiller is saying here is that it's liquidity that drives the market. It's not the valuation. Right now, there's no fear in the market. You can tell by the VIX. There's no fear whatsoever. So it's liquidity. There's money sloshing around in the system, as noted by the Federal Reserve's balance sheet, which has begun to hockey stick up. That money's getting put to work. It's saving banks right now. Are there problems out there? Is there a reason why they're expanding the balance sheet? Yeah, there's probably a couple of banks that blew up out of a short squeeze on silver. But the Federal Reserve is there to help. What else is liquidity for the market? Look no further than the high-yield debt market. HYG is an ETF. What did it do last week? It broke out. The first stress you're going to see in the equity markets is going to be on the high-yield debt market. It's not there. It's breaking out to all-time highs. Participation. Participation is critical. Now, when we began shorting the Qs, you had roughly 40% of the stocks on the triple Qs trading above their 50-day moving average. That's now about 55. What is it now? I have it up here. 58. So that's improved. So has the participation on the S&P 500. So what do we have here? We have a broadening out of participation. That's the mother's milk of a bull market. Then you take a look at this chart here. This is what you call a ratio chart of the Dow Transports relative to the S&P 500 weekly view. Dow Transports are now outperforming the S&P 500. Dow Jones just hit all-time highs. S&P's all-time highs. Small caps earnings growth is ballooning, and they just hit all-time record highs. That's the tape. That's what's fueling the tape, and it's being shown here. That is why we lightened up on our short position. The question then becomes, what can drop this market? Things like this. Trump calls for temporary 10% cap on credit card interest rates. I think the ability of the banks to charge 27% on credit cards is It's loan sharking. Let's face it. It's loan sharking. It's crazy. But I don't really believe in price caps. So what this, on the face of it, it looks good. But I'm concerned about government intervention in the free markets. There ought to be something done about those interest rates. People, it's slavery. Let's face it. And I always warn my kids about it. You go into credit card debt, you're basically signing off on being enslaved. So I'm not a big fan of this. I would watch out for the banks. In particular, I would watch out for JP Morgan. They make big margins on their credit card business. Big money. Now, an area that I'm really liking now is energy. We already have a natural gas trade, FLNG. That's one of our 7% dividend club stocks. It yields us. We bought it when it was yielding 12.75%. Now I think it's about 11.9%, but still the chart looks good. The premiums are still dividends still very nice. But now we're looking to broaden out that portfolio a bit and add more. We added natural gas last week on that gap lower. We have a very small position in energy stocks, meaning the energy services sector, Halliburton, Schlumberger. Those names are the names that we're going to want to watch or buy more of our leveraged ETF, putting us long of energy. Gush is the vehicle of choice right now. That may change. I don't like the time decay there. Now, here's the short interest on oil services. So you can see the shorts are getting squeezed out of their positions. So I wouldn't be shocked to see a retracement and a retest of this support level. But the fact of the matter is that the path of least resistance for the oil services stocks after last week's, what I believe to be a bottom in oil, is now to the upside. So we have become very bullish on oil services, and we will be looking to add more as investments, not necessarily trades in a very short term. We may do some trades as well, but more so building a core position in energy stocks. Now, I kind of went out of sequence here. I knew I was missing something. The thing to keep in mind with this headline, again, from the banks, the cap on credit cards, keep in mind where the banks are at. They're at the upper band of a massive uptrend channel. So this could set them back a little bit. So be careful. If you're thinking about buying bank stocks right now, caution flag is on the track. Technically and headline risk. Now, I'm going to play this. I got to figure out a way to put this. We're at war. I don't know if anybody, really gets this yet. We've been at war since 2016. I believe there have been a coup d'etat in this country in 2020, the election. You could argue that it happened in 2016 with the Russiagate hoax, but the globalists are ticked off, and they know the power of the presidency right now. MAGA is in charge. The midterms are coming up, and I'm going to play for you this because it's funny as hell.
Stop being a fucking asshole.
Sorry about that.
You're fucking up the homeland, and I cannot let that happen. Got it? Yes, Mr. Trump.
Okay. Sorry about that. I should have warned. Parental advisory. This is a family-friendly show. I forgot about that cursing. So, yeah, the British are kind of off the rails. I had never been there before. I purposely went there in May because I wanted to get there before what appears to be it's falling into a state of authoritarianism. And I did Ireland. I did England. It was a great place. Beautiful. Loved it. I would love to go back, but it's not in the cards anytime near term. the thing to keep in mind is that these guys, the globalists, World Economic Forum, all the guys that are the puppet masters of these so-called elites, I call them parasites, but they call themselves the elites. They want to bring Trump down. They want to reduce his power. And the only way to do that is in the midterm elections. And you can already see the protest industrial complex is in full swing, a la George Floyd and that lady that got killed the other day. This is another one. There's no cursing on this one.
I want a word with you, Donald. I will not stand by and watch you attempting to take over Greenland. Moreover, how dare you allow toxic American racist platforms such as X to empower my critics in Britain? You have a country where you allow even your critics to condemn you publicly? Outrageous.
Look at this guy. You think you can tell me what to do? Elon, get in here, Elon. Come and take a look at this.
It's a Dalek. Well, there's only one way to deal with the Dalek. You spin them around.
Spin him, Elon. Spin him.
All right, so that's pretty much all of it. But things are heating up quite a bit. I mean, if they ban X right now, Britain is trying to get Canada, Australia, New Zealand, and probably a couple of other countries to try to ban X altogether. So if they do that, there will be retaliation by us in some form or fashion. And the discussion of Greenland is a real serious thing. We want Greenland. I don't think we need to invade it, but I think that we need to make it clear to everyone out there that you touch Greenland, that's our new state for all intents and purposes. It's going to be a commonwealth or a protectorate of the United States. And he's right now sending that message out there. And believe it or not, they're going to try to send troops. I mean, Britain, and who else? Denmark are going to send troops over to Greenland to station them there. And here are the three morons. Keir Starmer, the head of Australia, whatever his name is, and this dope Canadian, they're going to try to ban X, and that's going to be a trade war. I'm telling you right now, it's going to be a trade war. And I thought that this Greenland talk was going to be all about nothing until I realized this. Justin, Bill Gates, Sam Altman, Jeff Bezos, Peter Thiel, and others have invested in AI-driven rare earth mining in Greenland with plans to build a freedom city. This is happening. I fact-checked this. This is reality. It's happening right now. So we're not, right now, China has 70% of the world's rare earth minerals. So it's a national security risk. So there's no way that we're not going to be in Greenland. It's going to happen, along with Venezuela. That's why we're doing what we are doing now. But they're going to try to destabilize this, definitely on the social front, meaning these moronic idiots in Minneapolis, despite the fraud that's taken place there, these idiots that they don't even know what they're protesting against. They'll be out there protesting, the next thing tomorrow if the email comes in that this is what you're protesting today. They can't answer a question. They're morons. They're robots, and they're programmed to disrupt. I don't think it's going to be enough to knock down Trump's polls. I think that they're going to need to do something very, very serious. And when you have a market that is this strongly overvalued, it makes the economy susceptible to an event. What will that event be? I don't know. But whatever that event is, if it's enough to hurt the stock market, it's going to be magnified tenfold due to the fact that we are so overvalued right now. So I would keep an eye on high yield debt. I would keep an eye on the 10-year yield. If the 10-year yield breaks out and high yield debt breaks down, you got to be short the market. All right, let's do some chart requests. Let's refresh this. What happened? What happened to it? Where is my post? Did I put it somewhere wrong? How did this get here? Okay. Maybe I pinned it. All right, let's get to it. Folks, this is going to be brought to you by our friends TrendSpider. So if you're looking for 35% discount, use the link below, head on over and get that discount. They may even have a better one on their website. I haven't checked today. And I will be giving this away to all members of the new platform, the new website when they sign up. TrendSpider is going to be included with all packages. And we have a couple of other partner packages coming down with TrendSpider in the coming months. So I have a meeting with them later on. We're going to be going from quite possibly from just having our current our oncoming trading platform. We're showing our positions to an integration of your brokerage account with one of their products, and you can execute off of TrendSpider. It's really, really cool stuff. So more to come on that. All right, let's get to it. IREN 4. That's a typo. All right, so Tim, you got follow through last week. I would still wait for the retracement. They routed us right up to the resistance levels. We got rejected. I would still wait here for the retracement. Let's see if we have any trend lines. No. Let's go daily view. This is a nice bull flag setup. I like how they're stair-stepping this up higher. Here. Here. This could still break out. I wouldn't buy it until we close the day out above $50 a share. And if it pulls back, going back to the weekly chart, if it pulls back to this support level here, $40.40, then I would begin probably getting pretty aggressive because you know exactly where to put your stop loss should we break down below the lows of December the 29th. So the week of December the 29th. So it's looking interesting. It's shaping up now. Let's go to comments. Yes, but that doesn't mean it can't go up higher. The only thing harder than fooling someone is convincing them that they have been fooled. Very, very true. That nothing more could be truer than that. I am not going to the UK. My memes will get. Yeah. Freedom City equals 15-minute city. Well, that's over in Greenland. Canada is sending fentanyl to the United States. U.S. Carney, be very careful. Freedom cities are still the same as 15-minute cities. Yeah, you can opt out of that. I'll tell you a quick story. I was going down to Miami. It was either Miami or West Palm Beach. I flew into Miami, I think, and I flew out of West Palm Beach last winter. And they did have a sign up that you could opt out. And they were shocked when I opted out because everybody was walking up like it was normal to have your picture taken. And the first time I went through, the guy was shocked. And he's like, oh, you're going to have to wait. And he couldn't figure out a reason to hold me up. And so he's like, all right, fine, go through. The second time coming back, I opted out. And the guy, I could see as I'm walking past, took the camera, pointed it at me, and took the photo. And I saw it download onto his screen. So there's sneaky TSA agents out there. So, yeah, you don't have to. You can opt out of that in the United States. Internationally, I don't know. Thank you, Bob. If you have a stock with a divvy and the stock goes down and the divvy goes up, does your divvy increase or are you frozen? No, it's aligned to your purchase price. So right now on my shares of FLNG, while the posted dividend is what, 11.62%. I'm still getting paid on my original investment, which we're up on. We bought it well over a year ago. Probably down here. We're getting paid 12.75% on it. So it's aligned to the price that you paid for the stock. All right, so Irene, we did that. What else do we have here? PayPal. There's a lot of competition in this space now. You're going to have Stripe going public this year. Let's go to a monthly chart. A lot of stock coming on the market in 2026. I wouldn't buy it. I wouldn't short it. You know, right now the path of least resistance remains down on PayPal. You know, you show me 49 and then a breakout, I'm a buyer. It'll probably get interesting once Stripe goes public. I don't know when they're going to go public, but it may get interesting then. Nothing going on here on a weekly chart. We had a bearish reversal week. Think about it. You had stocks breaking out to all-time highs last week. Yet PayPal was making not 52-week lower lows, but lower lows nonetheless. Here's the daily chart. And we're just consolidating here. Lots of overhead supply. I wouldn't do anything with PayPal right now. It's not deserving of your capital right now. Once it starts breaking out, then we revisit it and we could think about getting long. Not right now. And it's certainly not a short. David, Alibaba, Chinese stocks, pretty much in fuego. Awesome setup here. This is the monthly chart on Baba. Really nice setup here. It got ahead of itself. Retraced the support. The monthly chart looking very, very nice thus far. Weekly chart, good stuff here. Getting ready for a breakout. I think this is a buy. I would be fine with opening up a position now. Stop loss right below the lows here at around 145.50. And then I would add more on the breakout. Next price target, 178.56. Bullish on Baba. SGU. Weekly chart looks really, really good here. It closed above our resistance level at 1220. My alert expired. What I would want to wait for here is a retest. Yeah, we don't need that much time. It's going to probably happen this week. Okay. So SGU looking good here. I'm bullish on it. It did what we wanted it to do. It broke out. It did a retest on Friday, but I still think you could get another retest on a weekly time frame. I'm bullish here. I think it's going up. Last one up is Adobe. Adobe's in a bear market. They tried to break it out earlier in the month, but it's been rejected. They still may break it out, but it doesn't look good. I mean, the weekly chart, we took out the lows of the prior week. Volume was good, but they tried to rally it. It got rejected. Daily view, I don't like it. I don't like it. I wouldn't short it. I wouldn't buy it. And that's it, folks. Thanks for being here. Everybody have a profitable trading week. Like, subscribe, you know the deal. And if you want to be a part of the Contrarian Trader, you could still subscribe. Current prices, you just got to deal with the technical back-end issues right now until our new website is launched, and that will be ideally by this weekend, this coming weekend. Fingers crossed. That's my wish, and prices are going to go up. All right, guys. Everybody have an awesome remainder of your Sunday evening. And again, profitable trading week. Like, subscribe, you know the deal. Be well.